Assalamu alaikum, everyone. I think all of our speakers are here and good number of attendees are also present. So I think we can start now. In alhamdulillah, wassalatu wassalamu ala rasulullah. I think everyone can hear me, right? Yes, okay. Welcome, everyone. Thank you for joining us for today's webinar. I'm your host today. My name is Muazzam Hussain, and I'm the Business Development Manager at Millennium Information Solution, which is considered as one of the leading software solution providers of Islamic finance industry. We all are well aware of the current situation, and we are trying to get over it. Like here in Dubai, everything is resuming gradually. We are out for office, but believe me, things are not the same as before, and I'm not sure whether it will be normal again. On that note, we are here at the perfect place to listen how Fintech can address the challenges of Islamic finance and banking in the post-COVID era. Alhamdulillah, today we are very privileged to have a number of prominent experts from the industry. And I know most of you know them by name. Yet, let me introduce to our today's panelist. Let's start with Dr. Ahmed Kamil Maidin Mira, who is currently the Managing Director of the Z Consultancy Group. He was a professor in the Faculty of Economics and Management Science in IIUM, International Islamic University of Malaysia, and he was the Dean of the Institute of Islamic Banking and Finance in IIUM. He holds a PhD degree in finance from the University of North Texas. Then we have Dr. Kabir Hassan, who is a professor in University of New Orleans. He is the editor of 4 Islamic banking and finance journals. He has more than 329 published academic journals to his credit. He provided consultancy service to the World Bank, IMF, IDB, and he's also a board member of Ethics and Governance Committee and Education Board of AUFI. Today we also have Dr. Archana Hassan, who is currently the CEO of Salehin Sharia Advisory. He's also the Vice President of Malaysian Financial Planning Council. Prior to that, he was an Associate Professor at INSEF Malaysia. And currently he is a registered Sharia advisor at Bank Negara Malaysia. And he had the experience to be boarded in different Islamic bank as a Sharia member. We are also fortunate that we have Dr. Muhammad Iskandar Shah, who is an associate professor in INSEF and also serves as the associate dean for School of Graduate and Professional Studies. He holds a PhD in finance from University of Nottingham, UK. Last but not the least, we have Mr. Mahmoud Hussain, the CEO of Millennium Information Solution. He has completed his Bachelor of Science in Electronic Engineering from University of New Mexico. He is working as the CEO of Millennium Information Solution from 1997. He was the main designer of the first version of their flagship product, Ababil, which is an Islamic core banking solution. We also have a surprise today. We have Mr. Sheikh Karim with us as our moderator for this webinar. He has 30 years of banking experience in Gulf region. Actually, he's a part of Islamic finance history in a way, as he was a core team member of the first ever conversion of conventional banks to Islamic Bank, Sharjah Islamic Bank. He ended his career as a head of operation in the same bank after serving 20 years. And now we Millennium is blessed to have him as a consultant. Just a little housekeeping before we get started. Just to remind, all of the speakers will have 10 minutes for their speech. But if you, the attendees, have any question during the presentation, please type them into the question box in your control panel, not in the chat box, in the question box. I will bring them up after the initial speech, and we will have a short question and answer session at the end of their initial speech. Now, without further ado, I am handing it over to our today's moderator, Mr. Sheikh Karim.
Bismillahirrahmanirrahim. Assalamu alaikum. Thank you very much, Muazzin, for the introduction of the panel of learned professors. And I'm honored and privileged to be the moderator for this session. Respected speakers and participants, the coronavirus has upended the lives of millions in the world for an indefinite period. Millions have been locked down in the homes and lost their jobs, with businesses, tourism, and education institutions closed down. We start our discussion with some facts and figures to set the tone of today's session. According to S&P, the Islamic finance industry will continue to expand slowly in 2019 and 20. It expanded by about 2% in 2018, compared with 10% the previous year. This year, the estimate is about 5%. According to IFSB 2015, the Islamic finance industry has assets estimated to be worth $2 trillion and have grown consistently with a compound annual growth rate of 17% from 2009 to 2017. The modern day Islamic industry is approximately 45 years mature, with total assets estimated at 2.5 trillion in 2018, represented by almost 1,500 institutions worldwide. Thomson Reuters estimates that the Islamic banking assets can grow up to 3.8 trillion by 2020. According to S&P, we see three potential accelerators that could get the industry back to the days of strong growth: inclusive standardization, financial technology, that is Fintech, and environmental, social, and governance opportunities. The Dubai Future Foundation has quoted that the financial technologies industries is widely expected to emerge stronger from the challenging risk of pandemics as people turn to digital services. The report considers that the financial technology sector will be one of the most developed in comparison to other business sectors such as tourism, aviation, and retail. Having said so, we now move on to our topic today: how fintech can address the challenges of Islamic finance and banking in a post-COVID era. I would now turn to Professor Kamil. And before we start, we just want to remind our speakers that we have allocated 10 minutes for each speaker. Professor Kamil, besides your research and teaching activities, you have been involved in the Islamic banking industry for more than a decade on a global scale. Then you also started as an entrepreneur, providing consulting services to various organizations, including Islamic finance and banking industry. You also had your research work against fiat money and has been preaching for a society based on monetary systems backed by gold or silver. Although we are here for the post-COVID era, we also have uncertainty whether there will be any. So we want to start from the current situation and we will link the future. Sir, in your opinion, what are the challenges that Islamic finance industry may face in post-COVID era? The question number 2 is to you. May we know what is your thoughts and advice on the fact that some government and central bank have declared stimulus package and inject fund in the economy? Will it influence the Islamic banking to overcome the challenges of in and post-COVID era? Professor Kamil.
Thank you, Sheikh Karim. Alhamdulillah Rabbil Alameen. Salatu wassalamu ala Sayyidina Muhammadan Nabil Ummi wa ala alihi wa sahbihi ajma'in. Subhanaka la ilma lana illa ma 'allamtana innaka antal alimul hakim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. And also I'd like to thank Millennium for organizing this important.
We can hear you.
So I will go quickly because I'm given only 10 minutes. So can I share my screen to answer these questions so that it will be helpful?
I can hear you. Yes, I can see you.
Can you all hear me, please?
Sure.
Okay, let me quickly go over the background so that we can, inshallah, understand where Islamic finance stands in this entire COVID situation. And then I will answer the second question accordingly. Yeah. So what was expected? That means before the COVID pandemic, what we were expecting from finance is that there is a short-term economic cycle. The last one was in 2008, 2009. So normally it takes every 10 years. So we were actually expecting a financial, a bubble to burst this year. But there's also another one called a long-term contractive curve. This cycle takes place every 50 to 60 years. Yeah. So the contractive curve also is actually on the downward trend since year 2000. So you are expecting it to be downward trend until 2025 or 2030. So both the long-term cycle and the short-term cycle both going downwards in this period. Yeah. So we were expecting something to happen. But what was unexpected was the global COVID-19 pandemic. This one we didn't expect because suddenly it just happened and then it just sped up the entire process of economic recession and so forth. So basically just to, this is the contractive curve as you can see. You see the last, this thing is that it is going to go down from year 2000 onwards. You can check that out. Now the effect of the COVID, actually it comes from the real sector. The other cycles, normally they come from the financial sector when a bubble bursts, when economic bubble bursts, like derivatives bubble, a housing bubble bursts, then we go into that kind of situation. This one comes from the economic, real economic side. So the problem, socioeconomic implications are not actually from the disease itself. It actually comes from the lockdown. When the governments impose the lockdown, that's where in order to contain the spread of the disease, which they call flatten the curve, yeah? So this is where the thing comes. So when lockdowns are done, the first thing is a supply shock. Because factories stop and then many workers, retails all reduced, business basically reduced. So there is a supply shock and workers are also unable to go to work. Many of them were laid off. Some were taking, reduced pay and so on. So that also created a demand shock because less income. So there was a supply shock and a demand shock taking place simultaneously. Yeah? So just for the benefit of some of the maybe students who might be listening to this talk, I go quickly. Yeah. So as you can see, when the supply goes left, you will move to the left in the economy. Yeah. So originally, you can see we were in this position, original output level, aggregate output, but the economy moves left. But the demand also moved to the left. So ultimately, you come to a new equilibrium, which is from this Q to this one. So you actually fall, the economy shrinks. At the same time, the price level also tend to come down because of both effects. So the aggregate demand, when this happens, there are some effects that you will see. What is the major effect? First, the aggregate supply and the aggregate demand goes down. The liquidity in the economy shrinks. That means the ability for people to buy and sell in the economy shrinks. The main reason is because of the velocity of circulation of money. It starts with that, yeah? The velocity of circulation of money, therefore there's a liquidity shrink. So when the liquidity shrinks and then transactions are reducing, so there will be also investment also falls because there's less demand. Investment falls, export falls, and therefore unemployment rises. So when people's income also reduce, then you can expect loan defaults. Housing loan, car loans, people who have taken business loans, all will now at this point will suffer. So you can actually expect the real problem now transfer into the real monetary sector. So you will see bankruptcies coming, and foreclosures, banking crisis, and so on. Yeah. So Malaysian government, fortunately, they gave a 6-month moratorium for that. So when there is no demand, investment falls, then there will be a credit crunch. The banking sector also do not want to give out loans. So this Islamic banks will also face this. A credit crunch will come. So this will further shrink the original liquidity shrink, and the entire economy moves towards a recession. Yeah. So this is the problem. So therefore, Islamic finance will face problem in three fronts. One is by itself because people are defaulting. People are defaulting on loans and so forth. So it will be vulnerable itself on its own in the first place. The second thing is that the conventional finance, which is more vulnerable, as we saw in 2008, compared to Islamic finance. So the conventional finance, when it shows its vulnerability, it will transfer, as a domino effect, the problems to Islamic finance, because they are connected through the monetary system, the fiat monetary system, So it will be imported from the conventional finance. The third is, of course, it's also coming from the real sector from the pandemic. So the Islamic finance banking is actually faced with three-front attack on this pandemic, yeah? So the other effects, which I don't want to go quickly because otherwise I have only 3 more minutes. So you all know this, one of the effects will be property markets will follow suit within about, in about 6 months. So this will in my opinion, this will face a big problem, for them to come up again. We have to remember one of the sectors that takes a lot of finance from the finance banks, whether conventional or Islamic, it is the property market. So because of this, the banking sector and property sectors will face a serious problem. Yeah. So these things I have no time to discuss. Okay, so I will just go quickly. A 2 months lockdown, like in Malaysia, will destroy about 10 to 15% of the GDP. And even when you try to recover with, with our government, this thing, you will not be able to recover fully. Some businesses will be permanently wiped out. Yeah. So a lot of businesses will not be able to stand up again. So we have to take that into consideration. So how fintech? How many minutes can I have? Can I have another 1 more minute? Yeah. So can you all hear me?
Yes, yes.
Okay. So let me quickly how fintech can help. As you can see, the main issue here is actually the destruction of liquidity in the economy. So that's why the stimulus package by the government is very important. Without the stimulus package by the government, probably we will take years to recover. So the government must spend money. How the government will finance it is a different question. If you ask me, I prefer quantitative easing rather than borrowing. I have reasons for that, yeah. But the government's spending is very important. But we as the Islamic finance can also help. How we can help is we realize the issue is liquidity. Yeah, one thing you use crowdfunding. So the crowdfunding to mobilize funds from the surplus units and channel it to deficit units, jumpstart that way. Because there's many people having a lot of money, the wealthy people. We can mobilize that using crowdfunding, even small amounts, yeah? And also go for equity solution. We need to go for risk sharing principles, yeah? That's one. And those who are in debt, a lot of people will be finding difficulty to pay debt now. So those people, zakat can come in and help, right? But one powerful method that we can, fintech and in Islamic fintech is actually the wakaf. Wakaf is a very powerful method. Now, in fact, I'm not spending a lot of time in wakaf because wakaf plus the monetary system is the way to counter this, yeah? Because it can empower a lot of businesses, particularly the small businesses, including microfinance. So fintech can come up with all this entire structure, which involves and also cryptocurrencies is already a fintech because this supplements the destruction of money. So when the money is destroyed this side and then you have cryptocurrency the other side, so it actually adds into the liquidity, yeah. And if my governments can come with the digital money, that's another And I have my own Mukasa system, which is a netting system, and this actually supplies all the liquidity that you need without using money. So a netting system is a very powerful way of introducing liquidity without using money. Yeah. So, but this is not much, people have not done much research on that. And I'm very confident that this will be one of the rise from this pandemic. And I'm not actually, to be frank with you, I'm not even expecting Islamic finance to come and introduce gold. It's going to be America. It's going to be Trump. If Trump wins again, I'm confident he will go back to gold. And one of I highlighted the property market, right? So the property market needs to be revived. Malaysian market will face a problem. We need to go into Islamic REITs, real estate investment trust, in order to revive it using musyarakah concepts, equity concepts, like musyarakah mutanakisah concept, yeah? So Islamic REITs should be a possible way of reviving through fintech, yeah? And we all know that today the fintech, the mobile applications that you have, this agent banking and all those, they all increase financial inclusion. So financial inclusion also increases, the liquidity and efficiency in the markets. And I think I don't want to take other people's time, so I stop here. If they have other questions, I will be pleased to answer. 10 minutes is. Thank you so much. Assalamu alaikum warahmatullahi wabarakatuh.
Thank you very much, Professor Kamil. We have got a lot of insights from your deliberations. And main point what you have highlighted is very important for the Islamic banking thought process and policymakers. We find that the real crisis started from the shrinking of demand and supply position, where the Islamic banks will face a loans in the pipeline. And for overcoming this situation, you have also suggested many models, which the most important one was the risk sharing model, crowdfunding, the cryptocurrency introduction, and also your own brainchild, that is the netting system. We hope we'll be having another more session with you to understand this topic, inshallah.
I'll be pleased to, inshallah. Thank you, bro.
Thank you very much. We now move on to Professor Kabir. We also want to hear from you, Dr. Kabir. What are your challenges? What are the challenges that Islamic finance industry may face in the post-COVID area? Secondly, also as a researcher and teacher, how do you see that Islamic banking to progress in the post-COVID situation, and what should we do differently so that Islamic banks can contribute to society in general? As all are mentioning the new normal, what can be there for the Islamic finance industry? Professor Kabir.
Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi wabarakatuh. Can you see my screen? Can you see my screen?
Yes, Prof, we can see your screen.
Okay. Well, Professor Kamil has a good start. I mean, he has saved me some time by saying the origin of this crisis. the economics of this crisis. It is basically an exogenous supply shock, but that looped into demand shock. So it is spiraling and it is getting worse and worse. So, you know, there are different predictions. The world economy is going to shrink substantially. And the pain we are going to see all over the world. Now, the question is Islamic finance. We say that is supposed to how Islamic finance comes into play. Now we know that Islamic finance is a value-based alternative to conventional finance. Now probably a real test to see the value addition of Islamic finance. You know, one of these things that we talk about in Islam, when a debtor is in trouble, you know, give him time, you know, so that he can pay it later off. If you can forgive, that is better. And many countries probably have started doing this moratorium, like in Malaysian example, Professor Kamil has mentioned. So now where does the Islamic finance come into this conundrum? Now, usually we look at Islamic finance on two fronts: direct impact on the crisis by the Islamic banking sector will be minimal due to, in part, to intrinsic principles. We say this, but the way the demand supply spiral is happening is going to affect the real economy. And since Islamic finance is connected to the real economy, is going to have an impact more than what we have seen in 2008 and 9 crisis. Now, Islamic finance has a potential to assume deliver a noteworthy contribution to the international financial system, hopefully because of profit loss sharing system that you're talking about, the crux of Islamic finance. Now, if you look at the fintech, this is the, theme of this discussion, how the fintech can help within this parameter. You know, ever since we have been locked out, I have been teaching my online classes. I'm not a very online person, but I have converted very quickly into online. So technology is going to drive the future. And I'm afraid the number of universities is going to shrink as well. And I'm also afraid we are going to lose our professorship as well, because they don't need many people to really teach this online kind of thing. You know, the Sharia advisor, Robo Sharia advisor, Wahed Invest, you know, all these things can be done technologically. So technology will drive the future of everything, from education, from finance, everything that we talk about. So use of fintech for work-off crowdfunding, as mentioned by Camille, increased role of Islamic microfinance, education, health, food, social responsibility and solidarity. Since I also teach and I believe in it, so Islamic, the commercial Islamic finance, banking, which dominates, 70 to 80%, and, it's a riba-based system, fractional reserve banking system, which is highly opposed by Camille. And that problem is going to remain as long as we are within the Islamic banking framework. But sometimes we push it too hard. Let bank be bank, Islamic banks, what they can do, liquidity management, let them do that. And in the future, when time comes in, we are going to reform it. But we have to look at really Islamic social finance, which is more needed during this time of COVID crisis. And the question is, even Islamic social finance, let's say you want to give zakat, you want to raise funds, you want to raise sadaqah. How do you do that? You can't even see people. Even your movement to the masajid is restricted. So that's where the technology comes into play. Now, unfortunately, the technology field, we are also behind. Even if you look at Islamic finance industry, who rules it? All the big banks are controlling the Islamic finance industry. It's not really you and me where it started. They're using our market to exploit us, but through the mechanism, which is very similar to conventional product, when many people say this murabha banking. So having said this, these are the social finance we are talking about. I'm more interested in risk-free finance, risk-sharing finance, mudaraba, musharaka, microfinance, you have sukuk, waqaf, qardul hasan, sadaqah, and zakat. So this crisis, the Islamic financial institutions are going to face, there will be fragmented market, Islamic finance industry, each locality that we talk about are very localized and it's driven by the ownership. The investment in MFI and SMEs will be reduced because Islamic finance really is a major provider of funds to them. There is a liquidity problem in Islamic finance industry because cash flow not coming in, no profit or fear of merger, and that is happening right now. It's not only conventional Islamic finance, is even more urgent need for liquidity. The government is trying to providing in quantitative finance, quantitative easing as mentioned by Camille, and there are backstopping they are doing in the United States as well. The new customers, you can hardly see anyone dependent on government spending. Some countries, Saudi Arabia or Middle East, their economy is oil-based, and the Islamic finance industry is very much dependent on oil. Now, there is a fundamental difference between the 2008 and 9 crisis and current crisis. 2008 and 9 crisis started with the financial market, then it moved into the real market. So that was an endogenous shock, okay? And it really took many years to get out of this thing, even though there was a growth in the United States, but the financial markets really did not recover. So it's some sort of very paradoxical thing. And this is one of these things they say that riba, Allah has forbidden riba, and riba really curses the society. But this COVID-19 started with the health. Health is a public emergency. Either I'm sick and we are together well or together sick. Because of this lockdown, you are trying to flatten in the curve, but you are flattening also the economy and government. This fiscal policy measure, stimulus package is the right thing to do. Now it is affecting all over the Muslim world.
There is a sound problem. Majam.
Hello? Can you hear me?
Professor Kabir, we cannot hear you fully.
Cannot hear me fully?
No.
Can you hear me now? Hello?
Hello.
Hello, can you hear me now?
We can hear you, but your sound has been reduced.
My sound has been reduced. How about now?
Still,
Can you hear me?
still it is slow. It's still low.
Okay, I can hear you better. Maybe something new technology. Can you hear me now better?
I can hear, but it's because, what about the others? Others, can you respond, please?
No, we cannot hear. Very, very, very low sound.
Very soft, very soft, very soft, yeah.
Yeah, very feeble, yeah.
Very feeble. Okay. Can I switch?
You were doing good earlier.
You're doing good earlier. Now it's not working. Wow. My goodness. Can you hear me now? No.
No, it's same way because you have, I think the volume has been reduced.
Okay, can I switch to another computer? Maybe I know it's better. So restart, and in the meantime, instead of saving time, can we go to the next speaker? Okay.
Yeah, I will go to the next speaker and come back to you, Professor.
Yes, that's better. Yeah.
Yeah. Okay. Thank you. Thank you. While Professor Kabir will reset his laptop or computer, inshallah, we will move on to our next speaker, Professor Hassan. As a prominent economist and a Sharia expert, you have been engaged with many Islamic banks and such institutions. You have also been serving the Islamic banking world with your erudite advisory services. The similar question on fintech, I will repeat to you. How can fintech contribute to the economy by using the social instruments like Qard-Hasan, Social Sukuk, Waqf Fund, Zakat, and Sadaqah Fund? It is high time to launch new products and services which can help the jobless and people who have their salary cut to overcome their financial hardship. Over to Professor Hassan.
Okay, Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Rasul al-Kareem, assalamu alaikum and good afternoon. Can you hear me? All good? I would like to express my thanks and appreciation to Millennium for giving me this opportunity to be among these prominent speakers on this important subject. And just going to some points within the time given. Of course, I don't have slides to share with you, but just points, and I hope it will be beneficial and useful. Basically, you have posted a very important question, which is which has been actually partially captured in Prof. Camille presentations, and also partially captured in the presentation of Prof. Kabir, which is social finance, where we talk about Qard Hasan, social sukuk, waqaf funds, and managements, and zakat and sadaqat. And these actually are very huge and substantial segment of the market if they are really have been taken care of and promoted through governments and agency and private sector as well, especially if we talk about waqf. Combinations of these three, the way I see it, and I think the speakers and the audience will agree with me, that combination of Qard Hasan, social sukuk, and the waqf and zakat and sadaqat will basically represent a very substantial amount of wealth and finance in the ecosystem of the Islamic finance. If you look at all together in one hand, I do believe they can exceed easily even the size of the Islamic finance if they have been pushed in a very proper way. So here we are talking about a very important three pillars, which are fintech, number one, and number two, social finance, and number three, the economic growth. These three pillars can build a very solid economic that will be, or that will have a very significant impact on the society. The three pillars combine the tradition, such as I mentioned, zakat, waqaf, and Qard Hasan, and so on and so forth, on the platform of innovations and desired needs of the society, which is prosperity and basically welfare. Again, the combination of the three, fintech and social finance and economy, in my view, will realize maqasid al-sharia in very quick and short term because of the quick introductions of product and services, easy and quick and fast and deep penetration to the market and society, and significant impact on the society as well. So if you look at the fintech, of course, here we are talking about a very broad concept of the fintech. Basically, we're talking the fintech as a platform, as a tool as well. And this facilitate the offering of product and services to the society. So this is the platform which include as well the IT, AI, blockchain, social media, website, e-wallet, payment system, and so on and so forth. So the entire basically fintech that could be looked as a platform, tools, basically to offer the various products and services. That's the first one. The second one is the social finance. Social finance, I look at it as a raw material. But from that, we can build, we can design a product and services. Could be driven by Qard Hasan, could be driven by sukuk initiative or equity, could be designed based on waqaf, and could be designed based on zakat and sadaqat. If you just take the waqf, you could structure equity, you can structure sukuk, you can structure funds, investments, real estate, managements, assets, different assets classes like even financial services, wealth managements, and so on and so forth. So we have a various product that could be designed based on the three, four. So I look at it as a raw material. And the third component that we have highlighted in the question is basically is the economy, which is, I look at it as the end result that will have an impact on the individual and the society. So we have raw materials, which is the social finance, and we have the fintech, which is basically tools and platform. And we have the economy that we could see the result that will have a significant impact. Now, if we look at the economic sides, after offering product and services through the fintech, we will see the impact of the economy in terms of job creations and new business structures that will be introduced in the market using, of course, the social finance instruments. We're looking at the creations of a sustainable entrepreneurship, as some of the businessmen may undertake some business and venture into product and services by capitalizing on the social financing, being a Qard Hasan or a sukuk or equity or a waqf or zakat or sadaqat. And we have seen basically some examples in the market, like for example, even in Malaysia and elsewhere, where we see, for example, Fintera is venturing on the waqf. We have seen ITIS, for example, venturing on the sadaqat, global sadaqat, and venturing also on some platform using a crowdfunding. So there are some examples, Awqaf also here and there. Even some product has been designed and structured in the financial institutions such as Maybank, Bank Muamalah, Bank Islam, and others. And you see kind of innovation, even though for the time being it looks a bit small in a size and it's not having a very high degree of successfulness. But I think the pandemic and the lockdown and the virus make us to look back at those platforms and means, basically whereby the society, the supply and demand will be more familiar by using what's called the different platform of fintech to connect the offering of the product. They will be more familiar. I think this is the first time to have a kind of these conferences. We don't have it before. We start to having a meeting through Zoom. We don't have it before. Now education is online, and even Sharia compliance and audit, even our firms start to undertake some job online. So we'll see a shifting basically in a business model, and we are embarking on the new normal. I think this is a very good opportunity that people will be also, in the past, they will be reluctant a little bit to engage on some social finance product and services, but now it will be part of the package whereby they could be strongly promoted and people will be more familiar with it as part of the entire package of the banking system. Again, promoting opening an employment opportunity and for vulnerable groups, especially using Qard Hasan and sadaqats, and also contributions to the social protections for various schemes. And the importance of the social finance basically in this especially environment and pandemic is that they are driven by basically rich people, driven by CSR, driven by even normal people through sadaqat and waqf, and it is driven by the investment in the hereafter. So the other product and services offered by the financial institutions are mainly driven by the return in this world. But the social finance, the beauty of it, it is driven by the investment in the hereafter. And a combination of two on the same platform, I think it will give more opportunity, especially with this kind of environments where people are under a kind of pressures, very strict condition, economic condition, social condition. I think the social finance will be more appealing in this situation compared to the product and service which are profitably, which is profit driven. Now social finance can play a role in this kind of environments whereby it is driven by the hereafter and it is driven by helping the others and providing a kind of social protection, social scheme basically to take care of everyone in this kind of strict condition. So I see it more appealing in this environment. So I just to recap, before I close, we have a three pillar that can, in my view, form a very strong business opportunity. Meanwhile, expanding the boundary of the social finance from its traditional offering to an innovating offering, of course, capitalizing on the evolutions of the fintech in the market. So meaning we are shifting here the business offer whereby we have a quick and fast process, easy and simple, very convenient, We have the outreach, whereby everyone is now forced somehow to use this platform so you can reach them easily. Also, it is integrated and it is a trusted and transparent. Just to address maybe the last questions in 1 minute before I close, whereby, as you mentioned, in these environments, maybe I think products and services could be designed to target the people who are unfortunate, the people who have financial crisis, the people who have financial pressures, people who lost their jobs, people who are suffering from the impact of these lockdowns and this kind of pandemic, either locally or internationally. I think it is time for the financial institutions, for the stakeholders of the social finance to start to design. Of course, in addition to the assistance of the government, soft loans, and the stimulus package, I think the social side also has to play an important role by providing a package, through different platforms to help them. And meaning, instead of, for example, having a meal and then give it to one, maybe you can have a voucher, or you can have some money to be credited to some account and data. The government can provide those data and statistics to these stakeholders of the social finance. Then they can direct their needs and helps, at least within this different times, so everyone will exit in a very prosperous and with the minimum losses of this impact. This is the most important point I would like to highlight, and I would be pleased to receive any further questions to improve the input. Thank you very much, and assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you very much, Professor Hassan, for your thought-provoking deliberation regarding usage of the social funds, which will definitely increase sufficient equity and liquidity to the Islamic finance. And the thought process has started already, I think, by using fintech, social finance, which will augment the economic growth of the country. Fintech as a tool and as a platform, by using AI, websites, e-wallet, all this will definitely contribute to enhance the welfare of the society. And these will contribute definitely towards further growth in the Islamic economy as well as the conventional economy. With this, I will try to get in touch with Professor Kabir Hassan if he is available. Otherwise, Professor Kabir, are you available? I don't think we can see him. We will now move on to Dr. Iskandar. Sir, you have been with the INSEF for a good number of years and teaching the students Islamic banking and finance. We have seen the tremendous growth of the Islamic finance industry over the past decades. Yet, there are various parties who argue that Islamic finance industry has not yet realized its full potential, as it focuses primarily on profit and often neglects social objectives. Often it is also said the notion of risk sharing of Islamic finance is also missing in practice. Islamic financial institutions are called to put the theory of Islamic finance into practice and raise their efforts to put the theory of Islamic finance and improve the society for addressing issues such as poverty and socioeconomic security. Can Islamic fintech make a difference, or is there any change actually required? May we have your thoughts on this, please?
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you so much, Mr. Moderator, and also fellow panelists. It's been a while since I sat in the same panel with my guru in finance, Professor Kamil. I still remember vividly, his first lecture 22 years ago about the relevance of, revamping our so-called the monetary system. And it's still enjoyable as it was 22 years ago to listen to him again. And also it's a pleasure again to be together with Prof. Kabir, who we know that, is a great scholar and, has published quite a lot of articles. And my former colleague, Prof. Hassan, all right, and not forgetting to the chairman and also to the CEO of Millennium, Mr. Mahmoud, for not only visiting us at INSEF, but also to give me this opportunity to be part of this webinars. I'm honored to be together with all these eminent speakers and also fellow participants. So I think a lot of things have been said by previous panelists. Let me just make my point quite simple and also quite straightforward. The relevance of Islamic finance and also fintech. Whenever people talk about Islamic finance, right, people always feel that whenever there's a problem, Islamic finance will be the solutions. I remember, we spoke about it in 2008 and 2009 crisis, and people say, why don't we do banking Islamically? And then people were saying that this is the opportunity, we should not miss the bus, and, we should not miss the train again. And in fact, what we see after 10 years, again, we're seeing the same problem. And again, people come back and simply say that, okay, now we have to revisit and try to do things differently. So now the question that we all have to ask ourselves is that, is this the moment that we have to figure out that, the world need a different solutions? Because eventually, I always believe that if you end up doing the same, you're still going to get something similar in 10 years' time as well. All right, so perhaps in a different form. Okay, so that's very important that we all have to ask ourselves. So now the question that being posed to me is that, whether by applying Islamic finance or even moving towards resharing and using fintech, for example, as a mediator or enabler, would we have achieved or would we achieve a better objective? So let me basically start by highlighting the fact that, the three major challenges that we are facing as a human today is obviously climate change. Second is obviously inequality. And the third one is the huge gap between the have and also the have not just in terms of inequality, but also in terms of social opportunity, social mobility, social cohesion, so on and so forth. All right. And then somehow the world is being created in two forms. One's for the rich and another one is basically for the poor. And sadly, we see that these problems are more prominent or more profound in the Muslim world somehow. All right. And if Islamic finance is the right solutions, and if Islamic finance is the right way to move forward, that means we can easily implement Islamic finance and solve all these problems. But the question is, why can't we? Or why we are having this difficulty? So people might ponder that perhaps the solution that we have right now may not be the right solutions. Or maybe we are not doing it correctly. Or maybe we are still using the same enabler like banking, to solve the problems. So this is the thing, and I agree with what Prof. Kamil have said is that, maybe this is the time that, you might want to look at some radical solution. And for example, people always paranoia with quantitative easing. But unfortunately, everyone is doing quantitative easing. America is doing it, Europe is doing it, but somehow when Malaysia is doing it, it's a problem. So somehow we as an academics and also researcher, we don't understand the fact that, how come a solution which is proponent by, a developed country does not applicable, for example, to developed country. So, and a lot of people will come back to say that, oh no, inflation will happen, so on and so forth. But if you really understand how it works, you can create a mechanism where, the support and the stimulus package can be channeled in much more effective way. And this is what we have to do using cryptocurrency, using fintech, so on and so forth. For example, I just give you a basic example, right? If you give money to the people who doesn't have money to eat, so they will buy food and eat, and there won't be inflation, because inflation only happens when you have excess demand, right? And interestingly, we produce more food than we eat, because we always throw away 1/3 of what we produce. All right. So I always find that there seems to be a gap between what is being presented to us and what is exactly happening. So I always feel that, again, whenever we have crisis, we have opportunity. So and I try to basically look at what are the opportunities that being presented to us using fintech. And I just want to focus on two things. how to basically improve inclusion. And I will use Malaysian as an example. And second thing is basically the importance of trust as well. Okay, and how fintech can actually build trust, because I believe that trust is an element to build Islamic finance, because you cannot do resharing if there is no mechanism of trust. You know, there is no way we can achieve social cohesion if there is no elements of trust as well. So we need to see how fintech can actually improve inclusion and also improve trust as well. So these are going to be my two major points for my presentation. And I try to basically present with the time that which is given to me, because a lot of things have been said by the previous speakers, and most of the points I do agree with them. And I just want to complement my presentations with whatever been argued before. Okay, so a lot of people think that, you know, when fintech comes, this is another form of automations. All right, so this is basically another form of, you know, replacing what we call as an existing, facilities in the form of banking and capital market. But somehow, you know, we can argue that way, but the emerging of fintech has put a lot of pressure for banks to rethink their business. I think that's one point that we really have to understand. So now we probably see that there's a lot more alternative for us in terms of, you know, increasing inclusion or providing services to underprivileged, to underserved, and also to underbanked. Because a lot of people who are no longer, who used to be not credit worthy, but now can become credit worthy because of fintech. For example, the usage of your mobile phone, your payment of your electricity bills, even the simple, your saving or your expenditure pattern through, for example, digital wallet or e-wallet, so on and so forth. Those can be used as a data for you to assess the credit of the borrower, or also even the depositors as well. So the dynamic of fintech is that it allows more and more people to be included in the financial market, because inclusion is basically one of the main elements to get the benefits from the upside of the economy. For example, in Malaysia, there are some good policies. For example, we established Tabung Haji. We established, for example, a fund to mobilize savings from the poor, so on and so forth. And now, because of those funds, and they can really enjoy the upside of the stock market, they can also enjoy, for example, the dividend by our government-linked companies, and also all these sovereign wealth funds. So by mobilizing, for example, technology to get more and more people included in the financial services, it allows them to use the financial services product. And the data simply shows that, especially in the Muslim countries, a lot of people are still unbanked. Okay, and if you look at, for example, 1.7 billion people who are unbanked, majority of them are in the developing economies, and probably you know that majority of the developing economies are also Muslim economies. All right, so without naming the country, like Indonesia, for example, so fintech has actually played quite a big role. So we can actually pass by the banking system. Because one of the, I would say, the fallacy of Islamic finance today is that we always think that the solutions to all our problems will come from the banking sector. I think this is basically our misconceptions. Because a lot of solutions can also come from capital market, can also come from, for example, takaful industry, can also come from, for example, social finance. So there are many ways for us to push the solution to the people. So and because the availability of fintech, and I think we don't really need to depend on one sector in terms of increasing inclusions or pushing the solutions to the target market. Because today, for example, if you have a product, for example, combine micro takaful, micro saving together, and also microfinancing together, and you can collect all the data of the and measure the behavior of the, for example, your saver and also the borrowers. So that itself can become an input to assess their credit worthiness. And with the complete ecosystem of saving, credit, insurance, so on and so forth. So when we have crises like this, even they lose their job, so the insurance system can come in, for example, like employment insurance benefit or mortgage insurance benefits, so on and so forth. So their beauty about pushing the right product to the right people. And I have to say this, one of the biggest problems that we have today is that we always push the product to the wrong people. banks try to give loans, for example, to people who already have high leverage, give more and more credit card, for example. So I'm not really anti-banks. Banks are important. We need banks, but banks are serving a certain target market, but we also need to create a system where serving the rest of the market too. So that is basically my argument, and fintech allow that. And the other beauty about fintech is that you can create the whole ecosystem. The ecosystem of payment system, the ecosystem of saving, the ecosystem of banking, the ecosystem of e-commerce. So everything can just become one family. And with this coronavirus, people are coming out with, small community, where you can buy your groceries, you can go for clinic, and you can basically go for your health within the community. And I'm sure Prof. Kamil will agree with me is that, there's a place in Brazil who basically, use complementary currency. And if you created a small community among yourself, even without, for example, a legal tender, and you use a complementary currency and you create extra liquidity within the market, and by netting off the services we want each other, the community will still survive. In fact, the community can even prevail better, because they can do things without borrowing. All right, they don't really need an external fund, but we can just use services and the capital within the community and create economic activity. And there's a proof of concept. I'm not just making this up. I'm sure Prof. Kamil can add to this later. Places like Kuroshiba and Ithaca in New York and everything, because this kind of solution for me is really required today, because we are seeing the failure of the mainstream finance in terms of making sure that people's lives are taken care of. All right. Yes, some countries are better than the others, but there are a lot of people who are actually period by losing their jobs because there is no enough demand in out there because of the crunch in liquidity. So we need to figure out how to create additional liquidity in the market without tapping into our typical solution, which is borrowing, because this borrowing will never end, because it's only going to transfer wealth from majority to the minority. And these all property prices that are going down and asset prices are going down is only going to end up purchased by people who have the first hand to the helicopter money. So whoever get the first hand to the helicopter money, and interest rate is zero. So, for example, if the central bank create money and give it to me, for example, then I can go and buy all the asset at the 0% interest. And eventually I will tell that 1/3 of this world is actually belong to me. So we need to be very careful that, crisis create opportunity for a new solution, but also crisis create opportunity for people who wants to abuse the system, because the system can be used in the right way and the system can also be used in the wrong way. My last point is that fintech is cheaper, easier to create, and can reach most of the people where the banks doesn't want to go, and we can create a lot of solutions with it. So increase economy reach, so on and so forth. So I already argued, and you just need a mobile phone, and with mobile phone nowadays you can do wonders. So we really have to use it, especially in the Muslim countries. And the reason why is that because if people can trust a system like fintech, bypassing the government, bypassing the established institution, because a low trust and the low quality that we have because of corruptions and governance issue and because of abuse of power and everything. So this is where the private sector comes in. People like Mr. Mahmoud, who can create, for example, a solution and push it to the market. And when people start using that solution and bypassing the government, and that automatically will reduce corruptions. And by reduce corruption, the trust level will go up. And trust me, one of the conditions for successful economy is trust, because only trust builds social cohesion and also social mobility. So, and an example in India, for example, fintech have reduced 40% of the leakages because you can have a direct access to the funds, so on and so forth. So I already made my point. There are a lot of opportunity and there are a lot of solutions out there. It's not that this is something new. A lot of people are actually talking about it. A lot of new ideas are coming up. And in fact, I would argue that, the community become better and better because they are becoming more creative right now. The solution is not just in terms of the real side, and there are a lot of solutions that are coming out also in the financial side. So what left right now is that places like INSEF and other institutions try to put all these ideas together and push, for example, a new, I would say, radical ideas so that the world after coronavirus will be a better one. So with that, thank you so much. Assalamualaikum.
Thank you very much, Professor Skender. You have definitely highlighted some important points and the challenges, the three major challenges you have told, which is true in this world now: the climate change, inequality, and social responsibility. And also you have highlighted about the major opportunities in this crisis, which by way of improving the financial inclusion and element of trust through fintech. And you have also highlighted that there is a misnomer that fintech will take away jobs, rather than fintech. With fintech, we can include more and more people into the economy. Solutions can not only come from Islamic Bank, but by using other tools like social fund, sukuk, the ecosystem of payments, e-commerce, etc., insurance can help us to improve the quality of life of the people. And you have rightly said that at this hour is the right product to make it available to the right people. That, with that essence, I will move on to Professor Kabir, if he's available now.
Yes, I am.
Okay, just a minute, sir.
What is it now?
Okay, you can go on, Professor.
Okay, can you take your, this will stop other sharing? Yes, okay. Actually, the good part is in my absence, because what I'm supposed to say or about the thinking of saying has been already said, okay? So I want to change my gear a little bit. Professor Kamil talked about the economics of the pandemic, how it's going to impact. Then Iskander has talked about this fintech, how it's going to do that. But one important thing, we have to remember the value addition of Islamic finance. Why Islamic finance came into existence? Because we think in the conventional system, there has been a lot of injustice and we want to overcome this injustice. Unfortunately, the Islamic finance industry, the way as it exists right now, 80% of the banking and the banks, there is no difference between conventional Islamic. They take money from the poor people and give money to the rich people. So there are very little the banks can do. Now, whether Mahmoud comes in, do this, Islamic banking solution, he's also helping these big groups, okay? The rich people, not the poor people. Now, another thing is very interesting. We talk about fintech, we talk about technology, but we have to connect it with Islamic finance. Like always I say this, there is a two-in-one. Those who come from, like Iskander, me, or even Kamil, we come from conventional background and we love Islamic finance, so we sort of self-taught Islamic finance scholar. But it is also helping, but also it is really not very beneficial for product development. In order to have a product development, we have to bring Mahmoud Hussein to teach them how the Sharia works. Right now, Mahmoud can, second outsource the Sharia function. So this is not really within his spirit. But if Mahmoud was a Sharia scholar and a computer scientist at the same time, he could have brought a better and more real Islamic finance product. And that is missing. Interestingly, anecdotal evidence, one of my friend, his company, his biggest, is the most efficient coder in the computer science. Coding is very important, programming is a history major. So, it's the knack that you have to have at Harvard. There is a specific quota for techie people. So they will, they will admit technologically oriented people in their MBA program because they want to tell them the business side of it. Islam, this educational institute from our side, INSEA, for example, they can have a master's or something where they bring the technological or sociology people and tell and teach them how the Islamic finance work and Sharia work. So when you have these two in the same person,
that person will come up with a better Islamic finance product. And having said this, technology itself is not going to solve the problem. Yes, mobile technology is very useful. Even garments worker has it. But when you talk about blockchain, the high-tech technology, many people don't even understand. And we have to also look at, just because technology works, whether it's feasible, cost-effective to the other people. I have something I was going to say, like, already Asin has mentioned about this kind of thing. Now, what are the different kind of things that we talk about? Fintech is a combination of finance and technology, COVID-19. So it has to be flexible, it has to be efficient, attractive, and that's where the genius of the financial and technological people comes in. Now, in order to do this, they really have to know the Sharia itself. And Sharia is not difficult, but it could be difficult as well. So many times that in the last 60 years, how many different Islamic finance products we see in the market? Yes, we come up with this new generation techie guys. They are very enthusiastic and they come up with all the different technologies. But we have to look at whether technology is cost effective. It can go to the people, ultimate users, so they can use it in cost effective way. Like, for example, we talk about artificial intelligence, zakat collection, but how many people, those who give zakat, really understand this technology? We talk about blockchain for Qardul Hassan, we talk about Sadaka, Fintech, so crowdfunding, and then UNDP has its own platform, smart contract. So it is in the transition phase we are going through, but it is in the right direction. Technology will define the future of everything, not only Islamic finance, education, health, everything that you talk about. Even during this pandemic lockdown, the doctors are doing telemarketing because you cannot see the patient, so you do this kind of thing. Now, the final one that I want to, you already talked about Islamic RegTech, robo advisory, so these things are going up. Now we are talking about unbanked population. Technology can help to reach to these people, financial inclusion. Mobile technology is doing a great job. Blockchain, the cryptography is good, but whether that is feasible, it is still debatable. Smart contract can be done. Online banking has become very important. Islamic regulation. Now the question is, because it's a new, the regulatory perspective is still evolving there. Malaysia probably is ahead of the game, Turkey and some other countries, but most of the Islamic countries or Muslim countries where Islamic finance is there, for Bangladesh, we don't have an Islamic banking law to begin with. Forget about the Islamic financial technology or fintech. So that is coming later. Now, it's not easy, yes, as I said, because somewhere technology and knowledge, some is connected, literacy is connected, and Bangladesh and most of the 57 OIC Muslim countries has a problem with the literacy. Forget about this technological literacy. I'm talking about basic 3 R's. We are having this problem. Robo-advisor service, crowdfunding, person to person. This is some of the techniques being used. And finally, my last slide, Islamic finance is a value additive or value addition. What is the value in this thing? I mean, if the value is not there and it's another tool of making money, and this is what really in this Islamic finance industry in general, selling religion, people really don't care. They want to go to heaven. They put their money in Islamic bank. They really don't care how the money is being spent. So you do have we have to also do consumer advocacy. We have to teach the consumers so that they can also keep the industry in the right track. So there are my last slide, 4 points. Islamic economics. The greater goal is to have economic growth, equity, justice, equality, and so on. So the Muslims are strictly prohibited from investing and dealing with economic activities that involve interest, uncertainty, and speculation. Whether you talk about fintech, we are talking about regular banking or finance or commercial finance or social finance, we must skip this point in time. And we are discouraged, but also forbidden from investing in business that are engaged in haram activities. Islam prohibits paying or receiving riba, predetermined interest, and many ways. When we talk about risk management, Islamic finance or product development is slicing. We are trying to slice the product risk from return, and that will be totally disingenuous against the spirit of Islamic finance. And now we are really lagging behind, and the Islamic institutions, or though have taken the big role of teaching the future generation Islamic finance scholars, they really have to invest into this thing, that how that those techniques and how the business principles and the Sharia compliant way can be taught, so that we see the maqasid of Sharia, the way Islamic finance should be, we can achieve that one. And trading is the way, not doing business on the basis of lending on the basis of interest. So I'm very hopeful, but because of this, you know, a lot of questions that you see mainly coming from the Islamic banking industry, because the way they do their business is very similar to conventional industry. And not only that, they are very cost inefficient, profit efficient. So Islamic banks really make a lot of money, but they are also run very inefficiently. Because what is the answer? The answer, because people, they are trading on the people's faith and religion. We really need to get out of these things. We have to really think about the future and the day after, and we must develop this new generation of Islamic finance scholars. I would say now with this technology, not only understanding of theory, not only understanding of technology, also the faith part has to be combined together to have the holistic Islamic finance that's going to serve everyone, Muslim, non-Muslim. So that's all I want to say. Thank you very much. Assalamu alaikum.
Thank you very much, Professor Kabir. We actually missed you in the first part. However, I tried to recap some of the points which you have told. You compared that still the banking sector is dominated by 70 to 80% by the conventional banks. And you need to have Islamic social finance in place and a tool for risk sharing finance. At the latter part of your presentation, you rightly mentioned that we have to have new products by involving the Sharia scholars into the fintech, so that it becomes meaningful with social objectives meeting the ends of the economy. And technology has definitely reached out to people in most of the countries. But what means, has the Islamic banks fully utilized the technology for the social need or the social equity and justice? That's the question you have posed into to the audience. We have seen that technology regulation is missing in most of the countries other than Malaysia. So when technology regulation will come into place, the Sharia scholars come into the picture, we will have more regulated things in place for the Islamic banks. And we are still having technology not reaching in most of the countries, in the Muslim countries especially, where there are a lot of illiterate populations. They need to be reached out with a good amount of learning and literacy rate to be increased. And Islamic banking should have all the products with value additions. This is very important. You have also mentioned about equity and justice. And as a reminder or a warning, yes, I'm sure everybody will agree with Professor Kabir that religion should not be used as a tool to increase our profit, rather than we should go by the maqasid of Sharia. Thank you very much, Mr. Kabir. We will now move on to our last speaker, Mr. Mahmoud Hussain. Mr. Mahmoud, you have a solid technical background and an MBA. You have been in the fintech industry providing banking solutions to various Islamic banks for the last 25 years. You have heard about the challenges that Islamic finance industry may face in post-COVID era mentioned by our respected speakers. My question to you is how fintech can assist to address these challenges. More so, whether any innovative approach in fintech can rather augment the growth of Islamic finance and banking. Over to you, Mr. Mahmoud.
Yeah. Can you hear me?
Yeah, sure.
Bismillah ar-Rahman ar-Rahim. Allahumma salli ala sayyidina nabiyina shafi'ana hayyana mawlana Muhammad sallallahu alayhi wa alihi wa sahbihi wa barik wasallam. Assalamu alaikum, everybody. Thanks, Karim Bhai, and thanks to all learned speakers for giving me the floor now. Actually, I thought I'm lucky. I may get more time since Professor Kabir was, not appearing, but rather he appeared and attacked me. And it looks like I've got the least amount of time now. For your information, Prof. Kabir, before I go further, we do have system for the poor that is microfinance in SaaS mode. Very important. Maybe I'll talk about this later with you. And regarding, our Sharia knowledge, I do humbly, confess that, we don't have a Sharia degree, but over the period while, designing, developing, and serving a lot of, financial institutions, and, talking to, scholars like you, we came to know a bit about Sharia, and accordingly we are working. But again, our whole application is backed by scholars like you, and we have Sharia board, and we're in the process of setting up global Sharia board as well. I talked about this with Prof. Kamil recently. And for your information, our solution got Sharia certification from Islamic Sharia Research Academy, Malaysia, a part of INSEF. I think you know that very well. So after the talk of all the scholars, it leaves very little room for me to add about the Islamic finance. But I'll try to concentrate on the, technology, fintech, and how fintech can help in the post-COVID situation. As we discussed before, Alhamdulillah, pre-COVID Islamic banking industry was growing at a very reasonably, fast rate. And as per the Thomson Reuters report, the asset base was going to be 3.8 trillions by 2022. Islamic fintech was supposed to be contributing a larger percentage here. However, it is increasingly clear that the whole banking ecosystem is going to get an unprecedented shaking for this COVID and for this pandemic. Obviously, that's why we cannot expect the same growth immediately after COVID that we expected earlier. However, before I go into the main topic, if we discuss about the changes that we can expect after the COVID among the consumers, that is number one, consumer will expect reduced income, more savings than before will be made due to the future apprehension of recurring the similar things. Investing more in health and hygiene will be there. Then we'll see significant reduction in the international travel. And then the consumer will try to avoid shopping in physical stores. And then they'll be looking for banks offering services in digital form without having to interact them with the bank employees or any human beings. All these are to bring many-folded challenges to the Islamic banking and finance. And some of the challenges were discussed here. And also there were domino effect as stated by our prof, because of the liquidity crisis, shrinking in demand and supply, etc. If you're looking for a panacea to this, frankly speaking, it is hard to find one. But adoption of fintech and digital transformation of financial institutions can take us up to certain stage to address most of these issues. Let us see how fintech can address some of these challenges. Banks are expected to be desperate to find out new customers after COVID, and definitely they will be looking for liquidity. According to IMF report, less than 30% of households of OIC countries, they don't have bank accounts. So we are talking about the bottom of the pyramids. Imagine that the aggregate power of this segment is enormous. So for these unbanked people to onboard and then make it businesses viable, I mean, conventional way of banking is not feasible. That's where the fintech comes. That's because the fintech actually allows you to reduce your transactional costs. And then you can spread your breadth. And then through fintech, you can do so many things. Starting from door-to-door retail banking, go with agent banking with mobile taps, okay? Go to the door and then onboard people. Then mobile apps-based banking, including customer onboarding through mobile apps. Then P2P lending is going to be in a big way. And there's a huge, enormous amount of opportunities there. But for this P2P lending to work properly, we need actually proper credit scoring of the applicants, loan applicants. So there, artificial intelligence and machine learning based fintech will be playing a great role, because they'll be doing big data crunching using social media data and knowledge of the phone uses by the target customer, and also their micropayment system data. All those data will be required, and then through fintech and AI and machine learning, those data will be processed, and the proper credit scoring for individual could be correctly done. And then the P2P lending will be much more feasible and easier. And then we talk about this, the Waqf property utilization. My goodness, trillions of US dollar, they're lying in Waqf estate unused, and those could be brought under usage using blockchain-based technology and crowdfunding, okay? And then collection of funds through crowdfunding, that is also a part of fintech, and that is going to be a big tool for the financial institutions in future. Then fintech is likely to augment also, very important, micro savings, micropayment systems, and then microfinance using SaaS-based system that I just mentioned. Can you imagine the recovery rate of microfinance in Islamic microfinance mode? It's more than 99% in Bangladesh, and in other countries also, it is somewhere more than 98%. So for us who are working in the Islamic finance area and for the Islamic finance institutions, there are gold mine waiting to be unearthed. Then ease of cross-border fund transfer using blockchain technology. That's another uses of fintech. Let's talk about the positive changes that we're going to see in the trade finance operations. Sending LC directly from the client premise. It is a reality nowadays through fintech, and it is increasing without having to go to the bank. And then another big point is getting updates of the LCs, back-to-back LCs, shipment information, settlement of bills instantly by SMS from the back systems. That's going to happen in very soon. Trillions of dollars, we know that. Not only dollars in the guarantee form are stuck for weeks in the exchange of documents during LC life cycles, and these LC life cycles could be shortened tremendously using blockchain technology, and it is going in that way, that direction. So before COVID-19, the banking industry did a great deal of talking about becoming digital. However, only 15% of organizations considered themselves digitally transformed leader. So it is not easy, that's for sure. A research in McKinsey says that, before the coronavirus crisis, 30% companies succeeded in digital transformation. But now the crisis has given the world no choice of failure. The cost of failure is much more than it was before. If we talk about example of success story, Commonwealth Australian Bank invested in technology. They invested $1.1 trillion, and in Australia, they became the leader in online banking. Now, in coming days, we're likely to see complete virtual Islamic banking to come. And that is the path to go, inshallah. Now, at last but not the least, I would like to draw attention of all of us here that although it is one of the most uncertain and unpredicted parameter of the century that the scientists, statisticians, doctors are miserably failing to model and guess, but only Allah subhanahu wa ta'ala will have mercy on us soon, inshallah, and then this COVID system, we can get out of this COVID system. How long it will take for us to be in post-COVID position, we don't know. But then what should we do? My sincere request is for the Islamic bankers to get ready. This is the time to get ready for the adoption of fintech and digital transformation. And what they can do the selection of right partner, right system, and do the test run during that period. May Allah subhanahu wa ta'ala keep all of us safe and sound. Thank you.
Thank you very much, Mr. Mahmood. As Mr. Mahmood has rightly pointed, he was the only techie guy here. And so he was feeling that he has been attacked with. But Mr. Mahmood, frankly speaking, you have definitely highlighted that adoption of financial technology is very important in this present crisis. With adoption of fintech, we can definitely move towards a social justice, equity, and whatever is said with all the learned speakers here. You have also highlighted that there is penetration of fintech in almost all the economies in the world. Mobile banking, peer-to-peer lending business through AI, machine learning, use of social media data through fintech can also be used. The Waqf fund can also be, and the crowdfunding can also come into a fintech can play a bigger role in transforming all these social funds into the society. The crisis has also given us an opportunity to use more and more of fintech, and the faster the Islamic banks can adapt to the more digitalization and fintech usage, the better it is for the Islamic bank to beat the competition of the conventional banks. I will, with this, Dr. Kabir wants to talk. Dr. Kabir wants to talk.
Misunderstood. I did not want to attack anyone. I just used him as an example that the new generation of engineers, if they want to get into, so in order to accelerate their knowledge base of Sharia, the education institute can design courses for them so that they can learn it in an accelerated fashion.
I was just kidding. Okay.
Yeah. In product development, I think this has become a big problem. You know, when you talk about big technology, machine learning and all this stuff, and we are trying to apply this to Islamic finance, which is unique by its own nature. And if we do not know the techniques, these techie people, you know, cannot combine this together. If they can combine it together, so if we develop a curriculum, so that product development can go faster. Right now, it's still an imitating business. We have to go to the maqasid of Sharia, take Islamic contracts and permutation combination, and we also have to look at what the people want. Like for example, 30% our population is, you know, under 15, and there with the future, we have to really develop product and that really suit them, because we need to bring them to the mainstream economy. We make them employable, make them, you know, to earn money so that they can also, you know, praise God. You know, this is our whole purpose, because whatever we do, technology, fintech, Islamic finance, I teach, as a Muslim, our objective is to please God through our action, through our word and deed and everything. So I'm sorry, Mahmoud, I was just using as a, you know, pulling your leg.
Okay, before I move on to the questions of the participants, I would like to make my ending notes by telling about thanking all the learned professors here and Mr. Mahmoud to have us and give us your deliberation, which can be an insight for all the think tanks in the future. In order to overcome the havoc created by the pandemic, we need to have a coordinated and close cooperation from governments, financial institutions, policymakers, Sharia scholars, investors, individuals, and down to the smallest social unit of our economies to come together to look for solution to face the economic storm for a sustainable development in the future. More so, Islamic banks and financial institutions should try to innovate new products and services using technology which will ensure social justice and economic benefit to the society. With this, I will pass on the baton to Mr. Muazzam Hussain, who will take up the questions, and I will try to get the answers from our learned speakers one by one. Thank you very much all.
Thank you all the speakers and our moderator of this session. I have the same feelings like Dr. Skander. Listening to my two teachers is always refreshing. And thanks again to all the panelists for their initial speech. Now we will go ahead and take some questions. It looks like we have a few questions. So first question to Prof. Kamil, if you like to answer this one, maybe this question is towards you. Would you please explain more on the complementary currency as to how it fits with the existing legal and fiscal systems? And there is another question towards you. Most Islamic banking banks, actually I know, have a bigger portfolio of debt instruments. This means they are going to be gravely impacted as regulatory have asked for repayment holidays. What is the way forward for the Islamic banks?
Thank you so much for the question.
I cannot hear. We cannot hear.
Can you hear me now?
We cannot hear him.
Can you all hear me?
Yes, we can hear you.
Well, it's green here. Okay, what about now?
It's okay. It's okay.
Yes, yes.
Can you, okay, good. Huh? Okay, this is Dr. Iskandar's, he introduced the complementary currency thing. Anyway, complementary currency, it is basically, it is a currency system that works together with the national currency. Yeah. So that's why they name complementary currencies. Normally it is done within a location, but today you can also do it using mobile phones, so you can be also connected electronically. So what is a complementary currency is, for example, this LES system, for example, in the US, local exchange trading scheme, is a mutual credit clearance system. So when you do transactions, the system, you just keep records of who is buying, who's selling, and so on. Then periodically you net off. So it's also similar to netting that I was talking about. Yeah. So you net off, and then you only settle the difference. So what is the advantage of this? That means you can do a lot of buying and selling. You can do a lot of trading among the community with less money. So this system is good, especially in rural areas, because why a lot of money that normally circulates in the system, it will leave a rural area and go back to town areas, urban areas. For example, if I live in a rural area, if I sell a land or I sell a land, the money will not circulate normally within the rural area. It will leave to the urban area. So it doesn't really improve the economy of the rural area. So if you create a complementary currency for the rural area, then you can generate a lot of economic activity. So this is the complementary currency, and it has done a lot of wonders in many parts of the world. And there are many different types of applications. You can just go and Google complementary currency. There is a website for it. There are hundreds of different complementary currencies working in the world. And these are actually, most of them are in developed nations, not in developing nations, developed nations. Yeah. And coming to the second question, regarding what was that? Regarding the second question was regarding what?
Moratorium and Islamic banking.
Yeah, moratorium. Okay, the moratorium is quite. Thank you, Dr. Iskandar. You want to answer that?
No. You answer. You have written a lot on this moratorium issue.
No, I didn't write much, but one of the things that happens when the liquidity crunch takes place in economy, that I started off saying that the real problem is liquidity crunch. Yeah. So one of the things is that people will face difficulty in paying back loans. So if you don't do anything, then you will find a lot of people will be going and filing for bankruptcies and things like that will take place. So to avoid that, give some people some space to breathe and, while the system recovers itself. So we give, like Malaysia gave 6-month moratorium. That means let's say this is the period that you have to pay back your loan. We just push the entire period a little bit later. So what actually the total amount of collection for the bank is actually going to be the same, only that it's a bit delayed, yeah. So even that the banking system was making a lot of noise. They said they're going to lose billions of dollars because of this and so on, But yes, but if you look at just for Malaysian case, just the banks, their total, the profit they make is about 30 over billion. Which is, even if you take the profit of the 100 top, businesses in the country, if you add, you don't even match that, just for the 9 banks that you list. So that means it's not really going to be a real loss for the banks, At least everyone is, a pandemic affects everybody in the economy. So let's everybody share the risk. That is one of the reasons why I was saying, when we want to recover don't let the governments borrow money. The reason is, if you borrow money, then the rich is actually lending the money to the government to solve the problem. So they get actually rewarded. So those people who actually will bear the cost of recovery are those people without money, because they'll have to service the debt after that. You see. So that is the reason why I was for quantitative easing. If you use quantitative easing, If the government prints new money and then solves the problem, then it forces everybody to bear the risk of recovery through inflation. And of course, that also not necessarily is going to create too much of inflation, because the new money is going to compensate for partly for the liquidity lost first. Only if you create too much of money over and above the lost liquidity, then it's going to create inflation. You see? So that's the reason why what America is doing, what others are doing, in my opinion, is correct. Liquidity, quantitative easing is the way to go. But we countries that are poor countries, they will try to force us to borrow money from overseas. So we borrow from IMF, World Bank. Like Indonesia issued sukuk for 50 years. So a child which is born today will pay until 50 years old. The fathers and grandfathers will have been gone a long time. See? So this is so my answer to that. Thank you very much.
Thanks, Prof, for your answer. I think Dr. Kabir Hassan is trying to.
Yeah,
Sure,
can I just add something to what Kamit said? We just recently concluded with, there's a statement coming out of AOFI about moratorium, and it's more relevant to Islamic banking. If a debtor is in trouble, is coming from the Quran, you have to give them time. So from the ethical perspective or Islamic banking principle perspective, now, so we are bringing in a statement very soon, so that has to be there. But again, coming back, who does this? You're talking about in Malaysian Islamic Bank or Bangladesh Islamic Bank. I'm not really against the rich people, but I'm saying the beneficiary of this system are all the rich people. I mean, there's a saying in banking, if you owe little money, you keep coming to the bank. But if the bank owes too much money, the bank starts going to the borrower. So now, I'm sure for their own reason, forget about Islam, the Islamic Bank will also try to give them time. And of course, there's a government directive. But ultimately, from the equity and justice perspective, who is he helping it? It's not you and me, 90% of this. Like I was just on a WhatsApp message with my brother-in-law, who's trying to buy a ticket for my mother-in-law to come to the United States. And he was stuck for 3 hours because the government's worker strike. The government is giving money to the RMG sector at 2% so that it can keep them employed, but the government sector is not trying to do that. So ultimately, whatever you do, Islamic finance, the social capital that we're talking about, based on our iman or something character, forget about any religion you belong to, that is very much is lacking. We are becoming very much materialistic on everything. Your complementary currency, this and that, everything, you have to have a benchmark platform from where you can start. And that is very much missing, even in education system. I have a son, just as an example, he did his undergrad at Harvard, economics and computer science, and he's working for an investment banker. He's barely 23 years old. He makes hundreds of thousands of dollars. So I asked him, what do you want to do with this? Well, I'm trying to contribute to this. I told him, no, you are trying to make other people rich. You really don't care what you are trying. He works in the private equity, structuring, restructuring, and so on. And they have their completion scheme is different. But these are the brains are coming to the financial services sector to help others. They are not really building anything. They are really destroying many people's lives, really. And somewhere the incentive mechanism is not there because they make more money, it's easier to get the degree. They will not go and do a computer science degree, in engineering degree, they will not become a doctor because that's more difficult, it doesn't pay that much. So that distortion somewhere in our thought process is very much alive. So we really need to somewhere change it, and how we do this, I really do not know.
May I add something to it?
Yes.
Sure.
Professor Hassan said rightly, the main thing is makasat. That should be there. What's our objective? And doing Islamic banking, we are talking about social equity and justice. It cannot be just lip service. We need to do ihsan to the people who are unable to pay during tough time. And this ASAN is sort of moratorium or some grace period you gave, but don't charge during that period. I think that's what he meant. Thank you.
Thanks, Mr. Mahmood. So my next question towards Kabir Hassan, as he's associated with AUFI, I think this question might suit with him. Do you think the global Islamic finance industry presently has a robust regulatory framework for the application of fintech in Islamic banking and capital market space? And another question, if you want to post any comment on that, what your perception on the Saudi marketplace in terms of Islamic finance?
You know, the Saudi market recently has turned out to be one of the largest because Saudi people are religiously very conservative. They really want to follow the riba. They don't want to do this. But until like 4 or 5 years ago, there is Islamic banking law, but they have changed it. Now, because of this, every bank is converting to Islamic because the conventional banks cannot do. But having said this, in Saudi Arabia, they are taking the framework of the conventional fractional reserve banking system. So that has become a murabaha banking. So maqasid of Sharia, you know, risk sharing finance is very much absent. Tawarruk is there because, you know, Malaysia, Bal-Ina, they don't want, so they do Tawarruk. Tawarruk even more inefficient from the transaction perspective. It's more costly. So in Islamic finance, somehow you really need to get out of this banking system if you really want to bring the essence of Islamic finance. Only God knows when that will come, because we have started a jihad really in a sense, and Camille probably can tell, you know, he's against this fractional reserve banking system. That is the root of all crises. It's not only Islamic finance that we talk about. Conventional space too, the scholars talk against it, that this is really instability. Like in every 10 years, you know, there is a rule of thumb. If the interest rate is 8%, you divide 100 by 8. So every 12 years, you will see that that cycle, destruction is going to recur. It's the very nature of that cycle. Now, AUFI, what is AUFI doing? AUFI is a, you know, trade body. It brings up with different standards and so on. It doesn't bring out the regulation. It gives, you know, so there comes with different guidelines and standards. Countries can follow this, and you will be surprised. The many countries don't really follow it. Only 2 or 3 countries, Bahrain, because it's based in Bahrain, even or not all of the AUFI standards are followed by Bahrain. If you come take Malaysia, Malaysia don't care about AUFI. Okay, they have their own ways of doing this. But AUFI is doing a great job in the sense, at least they have developed the groundwork, homework. So this is a skeleton, this is a framework. You take it, you modify it, you adapt it within the context of your country, culture, and so on. Like Bangladesh is a secular country, right? So when you bring this thing, you can modify it, keeping the essence of Sharia or essence of Islamic finance there. And they're spending a lot of time doing this. And I've just recently been inducted in this Ethics and Governance Board. So look at the ethics, and very important, the ethical part, if it is missing from Islamic finance, and very much so. Just I give you one example. You know this doubtful income? The doubtful income, even though it should not be under this bank itself, the bank creates an institution so that it can control it too. And that goes against the Sharia. In many cases, they don't really, they keep their own balance sheet so that because of the liquidity problem, if they give it to a 300 crore taka every year, that will create a big liquidity problem for them. So there are a lot of hanky-panky going on. You know, nobody, and partly because the reason I'm saying that we have to have 2-in-1, most of the Sharia scholars, I have great respect for them, but they have very little understanding in the context of Bangladesh. Majority of them of this convention on how the Islamic finance works, how the bank works, what is the mechanism, and so on. So if they really knew this 2-in-1, the conventional knowledge and Sharia, they would have done their job better, and the industry would go into the right direction. So that's what I'm saying, that curriculum development. In NCF, you get your, you know, KPI if you have a ISI publication. Believe me, by writing another ISI publication, you are not going to help the Islamic finance industry. But the incentive mechanism in a different way, we are not really helping to go in the right direction, even in the education institute. NCF is one of the top institutes. But Iskandar is there, and Iskandar is not going to write a Sharia paper because it's not going to go to a ISI level journal, and Iskandar doesn't. So incentive mechanism has to be there as well. Sorry, thank you.
Thanks, Dr. Kabir Hassan. Now, next, moving on to our Sharia member of this panelist, Dr. Hassan. The question is more relevant for you. So I'm expecting you might share your thoughts on this. The question is it still premature for Islamic finance to talk about development instead of settling down with its Sharia values and principles, not exploitation of religious belief for making profits?
Again, if you don't mind, again, the question.
Okay. The question that is posted in our box, that is it still premature for Islamic finance to talk about development instead of settling down with its Sharia values and principles?
Well, thank you very much for the question. I think looking at we have to look at 2 points here from my perspective. The first one is the Islamic banking and the Islamic financial operations ecosystem. In overall, being banking or Islamic capital market or takaful, the entire Islamic finance in one hand, which is the regulated market. And the other one is basically the principles and Sharia rules of the Islamic financial transaction, which is known traditionally as fiqh al-mu'amalat. So maybe the fiqh mu'amalat, as far as the rules and principles, definitely they are complete, comprehensive, robust and sound. But here we are talking about the integration. And as long as we are talking about the integration, I think the development is still ongoing and still maybe it could be a bit a long-term process because Islamic finance doesn't exist only in Malaysia. It is in Malaysia, it is in Indonesia, it is in Bangladesh, it is everywhere. And each country has a different circumstances, a different challenges, a different position of the central bank regulator and government agency, to what extent they support Islamic finance through regulations, guidelines, standards, and so on and so forth. And as a result of that, in my opinions, it is still in the stage of ongoing developments. It's too early to talk about setting down because, as I mentioned, the Islamic finance we are talking about for 40 years plus, 40 plus, versus the convention, which is over 400 years, that has gone through a different cycle of crisis that creates some degree of resilience and sustainability to some extent. But Islamic finance, I think we are still in the very early stage. This is why maybe you have to pick up countries. Let's say talk about Malaysia. Is Malaysia in what stage and what direction should take in order to make the Islamic finance more reason? But in overall, maybe in a nutshell, overall high level answer, I think it is a still ongoing process that may require sometimes as well to have a very comprehensive what's called developments for Islamic finance, because we are not talking about only banking, we are talking about other part like social what's called finance, which is outgoing, and ongoing and needs some kind of support. That's my question. That's my answer, I mean, for your short question. Wallahu a'lam.
Thanks, Professor. So my next question towards Dr. Iskandar, being an INSEF graduate, first of all, I would love to hear from you on the last comment of Dr. Kabir Hassan regarding INSEF and what INSEF is doing for Islamic finance industry. And there are lots of questions regarding Sukuk. I just want your comments on, can Fintech can bring the transparency of cash flows and underlying asset in Sukuk transaction? Or can another thing is, can Fintech can increase the cross-border investment for the Sukuk market?
Okay, all right, thank you so much. First of all, thanks for pointing out what INSEF is doing. Prof. Kabir has always have a soft spot for us, I would say. He never forget to mention us in almost every seminar that he attended. Yeah, I mean, to a certain extent, I agree what Prof. Kabir has said. If you want to achieve a different result, the incentive structure has to be right. Obviously being a university, we always trying to do our level best in terms of serving the need of the industry. But the thing that we need to understand is that as being a university, our fundamental business remain the same, to produce top graduates, talents and research that can be used, not just for a short period of time, but I would probably say that more in a sustainable manner. But that incentive has to be created. We are trying to do that, and inshallah, sooner or later, we will probably see a better result from this university. To answer the questions regarding Suku, I spoke about trust, and trust can be achieved in many ways. First, obviously, it'd be a lot easier if you have a robust regulatory framework. And I spoke this morning in another conference, and you probably look at the problem with the Muslim market is that, or in any emerging market, it seems that money that coming into this part of the world is simply going after, for example, I would say, hot properties or undervalued asset. And then the moment, things get worse, or, the moment they make quick money, and then they will just bring it out. But it's slightly different when you look at the context of developed market, especially in Europe, and also in, America. Obviously, things are a bit different now, but especially in Europe, because they have a robust regulatory framework. It seems that the continuity and the sustainability is there. So I believe a robust regulatory framework is important. One mechanism to build trust. Second, obviously, a strong institutions with proper governance, and also less corruptions. So this is where Islamic finance can also comes in. Because Sharia governance and everything is trying to ensure that not just looking at whether a product is Sharia compliance or not, but more importantly, improve or enhance so-called the governance practice and improve the quality of institutions. So if you are not able to achieve these two, it doesn't mean that that's the end of everything. So that is the beauty about fintech with blockchain and with so-called all the process or mechanism that we have, that there is an alternative way to enhance the transparencies. So I do believe that with this technology and embedded, for example, with the current mechanism of Suku or whatever that we have, so that itself can build what we exactly that we want to achieve. Because end of the day, when you talk about robust financial market, consumer protections, and is very important elements. So if we can achieve consumer protections and transparency through blockchain and through fintech, why not? So it will help, especially in the countries where the regulatory framework is quite low, and also the quality of institution is also quite low. And unfortunately, I don't like to say this, especially in the Muslim world, we always suffer with low institutions and also not so robust regulatory framework. So this is where I think fintech can come in. Thank you so much.
Thank you, Dr. Iskandar. Actually, we were here for just 1 hour or something, but it's been like 2 hours, and it shows that we had a very fruitful discussion. So here we are came to the end. Great, and thank you everyone. We appreciate you being here. For all the attendees, a recorded version of this webinar will be available, and we will share it with you guys. And thanks again for joining us today, and we will see you next time, as we will come up with some series of such webinars, inshallah.
Assalamu alaikum.
Assalamu alaikum.
Assalamu alaikum. Thank you, everyone.